Hello, today I'm going to do a short video on mortgage payments. So it's always tricky to know what your payment's going to be. Let's go over to Zillow here, just kind of do what everybody does and pick house. So this house is in Buckeye. We'll use this for example. It's a good one. 380 is the purchase price. So we'll come back over here to my calculator and drop that in 380. 000. And Zillow likes to do, let's see where they show the payment, right here. So they're showing a 2367 potential payment. Let's see how realistic that is. Normally that's like a 20% down conversation, and nothing wrong with 20% down, but there's reasons to put that money down. Obviously if you have it, if you don't have it, then it's a moot point. Let's go over here and let's see. So I like to do percentage. Let's say we put 20% down. See how close we can get to that Google or that Zillow price. 30-year rate or 30-year term. Property taxes. Let's do exact. So we're gonna come down here, and if you use Zillow, this is a good way to kind of understand how to see certain things. We come down here. We go show more, and price history, tax history. Here we go. So this shows that last year the property taxes were $1,000. So if we come over here, let me pull a different calculator out so we can do the math. So what was that? 1062. We're gonna go 1062. 62 divided by 12. So 88 bucks, almost 89 bucks is going to be added to your monthly mortgage payment. Here we're just going to drop in 1062. PMI for 20% down, there isn't any. Zero. Okay. Home insurance, I estimate about 125 bucks a month. Let's see what that looks like. Times 12. 125 times 12. So 1,500. That's about right. HOA is not technically part of the mortgage payment, so we're going to start there and we're going to calculate. This is assuming 6.5 rate. So we come back over here to Zillow. Zillow says 2367. So realistically, the rate's probably not going to be that for a conventional loan. I mean, with maybe 1 point of origination or discount point as they call it, you're probably looking at closer to 7. Let's see what a 7% rate would make that payment. So just for reference, keep in mind this 2130 is at 6.5, so we're going to raise the rate half a point. And it raised it about 100 bucks. So technically on a home this value and this loan amount, every half a point is going to raise your payment or lower it $100 a month. So for Zillow, they're probably quoting a little bit higher rate. Let's see if we can get even closer. 0.25. Well, we just said 100 per half, so let's do 7.5. We'll try that again. Calculate. All right, 2339. So Zillow, give or take, is saying with 20% down, this is your rate. Now let's do what average Joe would do. We're going to say 5% down. And I like 5% because with a conventional loan, 3% yields a really high mortgage insurance. So for the sake of this, we're going to say 5%. Let's do mortgage insurance. We'll assume it's around the FHA number. So 0.55. That's how this is going to work. And let's keep the rate at 7.5. That's give or take where you would be. If you want to be competitive, we'll go 7. And calculate now. So we were at 2,300. Now we're at 27. So that's a more realistic number for a $380,000 house, $360,000 loan. 2,800 bucks a month. That was kind of crazy. Let's do this. Let's say I like to give an idea of like per 100,000, how much is this costing me? So let's see. We go 3. Yeah, let's do this. 2780 divided by 36000 equals. So it's costing about 700. Do some math. Do some decimals there. About $772 for every $100,000 that you're financing. So that's the biggest difference with your down payment, is that per 100,000 will go down. But I wanted to do this exercise just to kind of give you an idea of what it looks like. And again, this is a real taken straight off of Zillow exercise. We'll do an FHA one real quick. And this is going to be the FHA standard mortgage insurance as well, 3.5%. And keep this 270 or 2780 in mind. And this is the buy. So let's do that. So slightly higher, slightly lower down payment, slightly higher payment, and that's probably about the difference for the payment versus. Now the cool thing about FHA is you're gonna gain about a quarter point in interest at no cost. Like that's just, FHA tends to have a little bit better rates, assuming you have a decent credit score, 680 plus for this example, I would say. Let's calculate that, 6.75. Now we're under the conventional loan payment, apples to apples, pretty much. So I hope this makes sense, or at least gives you kind of an idea of how to break it all down. And if you wanted to get into the weeds, you could do your amortization table. But the bottom line is, in a 30-year mortgage, most of your interest, or the lion's share of your interest, is going to get paid up front first 10 years. So if you kind of looked at your amortization schedule, that first 10 years is very front loaded. And that's why it benefits you to take advantage of some strategies like paying every 2 weeks, half your mortgage every 2 weeks, or something a little extra, because that really does over time knock down your principal. Like I said, hope this makes sense. And again, this is on a 380. We could do any number you want. If you have questions or want to see another video like this, just drop a comment and I'll be happy to do it, or give me a call. Have a great day.